Well, the November real estate numbers are in, and let's have a look to see what Halton region did as a whole, specifically narrowing down a little bit into Burlington, Oakville, Milton, and Halton Hills to find out what each of those municipalities did, what their real estate markets did, and maybe which ones outperformed the others. Additionally, we had the Bank of Canada do their rate announcement yesterday. So let's hang around to the end and we'll touch on what the real estate market might look like given the message from the Bank of Canada. So looking at the latest market data here, specifically for the Halton region here, I am going to be just looking down at my screen, so I do apologize for looking off camera a little bit here. But as you'll see, Halton region brought in a little bit over 1,000 new listings just in November alone. Now that is down substantially month over month. Which is it seems like a pretty good thing for sure. We don't need more listings. We sort of have a lot. And year over year, we're down 10%, which is really what the number that we kind of want to be looking at. Now, if I do have a little click over here and just look at the overall kind of typical new listings that come on the market, you will see here we are in November. We typically have a big fall off as far as real estate new listings go every year. Our bottom is going to be December every time, so not unheard of to have new listings, fewer new listings is what I meant to say, come on the market every November as we move towards number one, Christmas, and people's minds go elsewhere, but of course going into winter where not a lot of people want to list their homes in winter. So the next one we're going to be looking at for sure is going to be sales. We want to be seeing the new listings and the sales be much closer than they have been all year, and certainly for the past couple of years. This number of sales is just around 50%. So 50% of the new listings are selling, kind of thing. And so what that turns into is active inventory. So active inventory is the number of listings that are currently on the market for any buyer to take advantage of. And of course, we're seeing that come down about 15%. Again, going in towards the holiday season, not uncommon, but that up 16%, that is going to be one of those numbers that we're going to be looking to come down, right? We don't want to have active inventory continue to climb. Now, of course, having lots of active inventory, not a lot of sales, that has added into the average year over year price being down almost 6% in Halton region as a whole. Now it is up 5% month over month, but what we did see is we saw our late fall market. Typically we'll see either a September or October and sometimes November be our kind of uptick month over month. Both September and October were down month over month. So it fell on November to be that month that people jumped onto. Now, if we move on and we look specifically into Burlington, we're going to see much of the same kind of like trends and numbers. We saw a little over 300 new listings come on the market, down, that same kind of 38 roughly percent month over month as we move towards the holiday season. And then we saw the number of new listings come down 7.5% year over year. So, we're inching in the right direction, but still have a lot of new listings coming on the market. Sales, again, same idea, same trend, about 50% sales to new listings. And then month over month, down 33%, almost 34% here, with a negative 27% year over year. So then looking, of course, at active listings next is going to be, the difference between the number of new listings coming on the market, the number of sales, and then, of course, what comes off the market because of cancellations, terminations, et cetera. Active inventory is down 12%, almost 13% month over month. But of course, up almost, 18%, I almost said 20%. I didn't want to round too much, 18% year over year. So that active inventory is still quite high. Average price, again, same idea, up 6%, 6.5% month over month, and then down 4.7% year over year. Now, if I jump over and I share some additional kind of data with you in perspective, I suppose is what I really want to say, is the number of active listings here. So here we are still in Halton. I am jumping back out of Burlington. I wanted to touch on this in a second ago. But what we're seeing here is the number of listings, that active listings kind of like continuing to creep up here. As you can see, there's certainly that upward trend. Now we are kind of coming down, which is good, but we typically saw that every single year as well, right? So we're seeing that active inventory come down into December, So we are kind of going through that pattern. We want our peaks to be lower, kind of like year over year, and our troughs to be lower year over year as well. And I honestly don't think we're going to see much of improvement on our real estate prices until these numbers start to come down. So if I roll over to Halton Hills here, much of the same here. Now, much smaller market, so we're not going to have the same numbers. And then, of course, as we saw last month, a couple of listings can really skew the numbers because it is a bit of a smaller market. But 90 new listings, half of those were sales, down 47% month over month, and down 12, almost 13% year over year as far as new listings go. Now sales both down almost 16% month over month and almost 20% year over year. So we're still not seeing those sales numbers kind of hitting where we really want them to be hitting. And then of course, active inventory, down almost 17% month over month. I got to get myself straight here. And then up still like almost 23% year over year. So we are still seeing that pattern across the board. Now that translated into kind of our flattest market, if you will, as far as prices go. So we are down just 2% month over month, but year over year, pretty flat at just down 0.7%, so just under 1%. And so rolling over to Milton here, we saw much of the same pattern across the board. The number of new listings, 242 new listings, with a little under half of those being sales. So the new listings down 31% month over month, and just almost 17% year over year as far as new listings go. So again, kind of heading in the right direction, just not quite there yet. Sales, down month over month and year over year as well. So, when we look at the difference between our new listings down 17%, but our sales down, almost 20%, that's the discrepancy that we're going. So, while the listings are coming down, so are the sales coming down as people kind of like wait and see and look for a little bit more confidence in the overall economy, I think. Active inventory, mirrored the rest of the municipalities as well. So down almost 17% month over month as we move towards the holiday seasons here. And then year over year, still kind of climbing a little bit. Now, on the lower side of the increases that we see here at 13%, but still on the higher side as active inventory continues to climb. And then so that translated into just under 6% month over month increase as we saw kind of our late fall market, but then down 6% year over year as the market continues to kind of slide on that excess inventory that the market is carrying, and buyers kind of, for the most part, sticking around to the sidelines and just kind of waiting to see what happens. Now, if I roll over to Oakville here, tail of the tape is the same, right? So 430 new listings, half of those are sales. So that sales to new listing ratio still at that 50% mark or so, down 36% month over month, and down almost 7% year over year. As far as the sales go, down 21% again, but then pretty flat year over year at just down 0.5%, which is comforting as far as that market goes. It means that the buyers are still there for the most part. I think we're really seeing that propped up in the detached market there, where maybe some of the higher income households aren't affected or influenced quite to the same degree as some others that are going to be a little bit more rate sensitive. So then active inventory, of course, we also saw that come down month over month, but then be up pretty significantly year over year as well. Now the average the average sales price, being up 3% month over month as we had that fall market, but then down a pretty hefty 11% year over year. Again, probably leading by that detached market, right? So when these large houses you're listed at 8, 9, 10, 15 million. I saw one come out today, 15 million, as they tried to sell it for 20 million a couple of years ago. you're having those big jump downs, right, as far as those multi-million-dollar houses go, which will bring those kind of like those averages down as the bigger ones sell for a little bit less, but still far out of the reach of the average person. So then let's roll over to interest rates. Well, what did we see when I originally wrote this and started to record this video? The Bank of Canada hadn't released its announcement yet, or done its announcement. They did it yesterday morning. So they decided to hold on to interest rates as we were mostly expecting. But what we actually saw was some of the change in the verbiage a little bit. Previously, it was pretty much bet on that we were going to have a rate hold in December here, and then we're going to have a rate cut in January, and if not January for some reason, then March. March for sure. But what RBC's take on it today was that they're pretty much going to hold on throughout 2026. So what does that mean for buyers and for sellers? Well, for buyers, it means that you're not going to get that rate relief that maybe you were hoping for. For sellers, what it means is that buyers are probably going to stick to the sidelines a little bit longer, and the affordability is probably not going to be there as rate decreases might have kind of given them a little bit of ease off the pressure. So I think what this will translate into is going to be, more of a soft market through 2026. Don't forget, we're going to have all the 2021 5-year renewals coming up in 2026. So we'll likely see, a few more active listings come on the market, new listings come on the market. So inventory will probably stay on the higher side through 2026. And if we don't get any rate reduction or a rate relief, there's a really good chance that that active inventory is going to start to climb again. More choices for buyers, that those are going to be getting into the market, and probably fewer buyers coming into the market if they're not getting any rate relief. You might going to have potentially some price relief, though, as I'd be willing to bet that the market is probably going to slide downward through 2026, maybe even into 2027, before we start to maybe see a little bit more activity. Anyways, if you're a buyer looking to get into this market, I do have a free buyer's guide and actually a whole starter pack for you if you want to. Click on the link below. And if you're a seller kind of exploring maybe selling in this market, knowing that it's going to be a little bit soft for a little while longer, you're interested to find out what the value of your home is and what a realistic, honest value is, and maybe kind of help you navigate this very interesting market. Feel free to reach out anytime. We'd be happy to chat with you. No pressure, just all facts and info. Anyways, I'm Andrew with the Roche Friendly Real Estate team. Thanks for tuning in. And if you like what you heard here, please consider liking and subscribing to the video. Certainly helps out. Thanks a lot.